By the way, Japan's market soared today despite a gloomy report on business confidence. In a quarterly survey of 10,000 businesses, the outlook became a lot more pessimistic in Japan in the last 3 months. The survey's index registered its biggest drop since February 1975, nearly 34 years ago. In this country, authorities are calling it one of Wall Street's biggest Ponzi schemes, a huge fraud, a pyramid game led by a veteran Wall Street money manager named Bernard Madoff. He is a former chairman of the NASDAQ exchange. The alleged amount, $50 billion, not only included investments by wealthy individuals, but pension funds and foundations and charities. Also, there were investments by well-known banks in Britain, Scotland, Spain, and Japan. Some investors claim they were wiped out, and this scandal is still unfolding. Among those following all of this closely is Andrew Ross Sorkin, a financial columnist and editor at the New York Times, and editor of Deal Book, a financial blog on the Times website. Thanks very much for being with us.
Thank you for having me.
So we've heard about, these foreign banks that have now invested in Madoff's funds. What sort of losses are they facing, and who are they? How big?
Well, I think we're talking about $50 billion in aggregate, but when you're talking about the individual losses at some of these banks, Banco Santander in Spain is saying that they've lost perhaps $3 billion with a B. So these are not insignificant losses. We have individuals who've lost money. We have, as you said, charities that have lost money. Steven Spielberg's charity lost money. So there's really a question towards how far this really goes. I don't think we know yet.
Well, it's one thing, I guess, for a personal investor to be duped, so to speak,
right.
But banks, I mean, these are people who supposedly specialize in looking at the books and knowing where the money's going.
Sophisticated investors.
How does it happen?
Well, that is the, in this case, $50 billion question. The other question is how they were able to dupe, in this case, the Securities and Exchange Commission, which actually investigated Mr. Madoff on 3 different occasions, once in 1992, and then recently, 2005 and 2007. So one of the big questions is how long this Ponzi scheme has actually been going on. Has this really been going on for 20 years? Or perhaps maybe it's just gone on for the past couple of years. But in any case, both very sophisticated investors were duped and potentially the government as well.
One of the things that draws investors, particularly to the United States, is the belief that if you invest in this country, then that is a safe bet and you can't go wrong. This flies in the face of that.
I think if there's one takeaway from this entire experience is that I think that confidence, which had already been shattered, frankly, by what's happened in the markets already, is going to be shattered once again in a whole new way, and it actually resonates with people individually in a much more meaningful way than I think sometimes we talk about an AIG or a Lehman Brothers. And so I think the biggest worry going forward is actually that some of these foreign investors may not actually look at the United States as the safe haven that it's always been considered.
Andrew Ross Sorkin, thank you very much for talking with us today.
Thank you for having me.